Jocelyn. All right. There are 3 parts to the accounting equation. They are assets, liabilities, and owner's equity. Now, how I have this arranged up here is I actually don't have like a notes in the order that I go, as much as I have these are the words, like vocabulary words that you need to know, and these are examples of how we're going to go through it, okay? And then on the back is a second section where it has more of an equation, and then here it also goes through some more words. And I will try to help you guys know where we're at all times, okay? So we have assets, liabilities, and owner's equity. Assets is on here, so make sure you write down what an asset is. Okay, assets are property of the owner. It's what the owner has, so that's more than just money. Let's say that I own this business. I have a desktop publishing business. Just looking at, and this is my business, this is what I have set up, what are some things that I own that would be considered an asset? Okay, my vehicle, business-oriented. Okay, my computer. So my computer. Yeah. So let's think that this is right. If you were to walk into the dentist business, you'd walk in. This is exactly what you would see. Assets are properties of the owner. So it's any equipment, supplies, buildings, or money that I might have. So I have my computers. Are they an asset? Yes. Do they fit under equipment, right? I have equipment. Okay. What else can you think of that I would own? Looking at this classroom. Desks. Books. Anything from computers to that sheet of paper. Okay, all of it is considered an asset. It's something that I own. It is an office supply, my pens, my pencils, my binders, that TV, this whiteboard or whatever it is, the smart board. Anything like that is considered an asset. Now, it is what gives me worth. So even though I had to pay money to get these computers, I own them, and so they are an asset. I may owe money, but I may also have them, so it equals a balance.
Well, that's why I was asking if there's so many payments on them.
It is still considered an asset. Even though, so if let's say I bought all of these computers on loan, because I own them, it is still considered an asset, because could I, if I wanted to, sell them for money? Yeah, right? If I needed to, I could sell them for money. I probably can't sell them for the amount that I paid for it, but I could sell a highlighter if I wanted to, right? Mm-hmm. I could sell these desks, I could sell these chairs, and if I needed to, I could get my money somewhat back. You generally don't get what you paid for it, but you can get at least somewhat back from what you got. Buildings. So let's say that I owned this building. This would also be considered an asset unless I was renting it, but we'll get into that later. And then any kind of money I may have either in my bank account or money that I am earning. Okay? Frequently buy these assets on credit so they don't have full ownership of their assets. Now, generally, when you start up a business, you don't have $1 million, right? Just kind of laying around to where you can buy everything without putting it on credit. So, buying on credit creates a liability. What is a liability? Okay. Liability, it could be breaking it, but that's not the accounting term of liability. A liability is basically the amount that I owe a creditor. So it's how much I am in debt. Okay, an asset is how much I actually owe or have in my possession, and my liability is how much I owe another person. Okay, then you have owner's equity. And owner's equity is the part of the asset that you own or the owner's claim. And they have to equal each other, all three of them. Okay? Now right here, is my little poster that I dug up and I found a place to hang it up. Assets. So what I own or what I have in my business, plus my liability, so what I owe. Assets equals my liabilities, what I owe, plus my owner's equity, what I actually own of it, equals my assets. If you can remember that equation, you're good. Okay? Yes. So right now on your little sheets, you should have assets filled out, owner's equity filled out, and liabilities. So how much I owe plus how much I actually own of it equals how much I am worth. That's what your assets are, is how much you're worth. And the equation down at the bottom is assets equals liabilities plus your owner's equity. Let me try to explain what that means. Okay, so here I have my assets or my property, what I owe, or I'm sorry, what I own, what is like in my possession. My liabilities, which is what I owe, plus what I actually own because I don't owe anybody for it. Okay? So let's say that I bought a bike. My bike is worth $1,000. Huh? Yeah, I have a bike that is worth about that much. I need to start writing it more. But, okay, so I have a bike that's worth $1,000. Where would I put that? Or do you need more information? Okay. Let's say that, hold on, I can't remember what the $600 is for. Let's say that I only have $600. I buy a bike from Holly for $1,000, and I give you $600. Now what? I still owe you $400, right? So my asset, I have a bike that is worth $1,000. Whether I own all of it or whether I owe part of it, or I only own part of it, I have a bike that is worth $1,000. So that is my asset. That is my property. My bike is worth $1,000. Okay? Now, I paid $600 for that bike. So my owner's claim or my owner's equity is $600, which means that my creditor claim, or how much I owe, is $400. Does that make sense? So I bought a bike, I paid $600 for it, that's how much I own of it. This is how much I am lending, and this is how much it's worth. So how much am I worth? I'm worth $1,000. Okay? Even though I owe that much, I technically am worth this much, because I could sell it.
That's what net worth means?
That's what net worth means, yeah.
I did not know that.
Yeah. Okay. Assets are not grouped together in a single account, so you won't have like all these accounts that are assets in one account. Each asset is given its own account name so that the account spent on can be tracked individually. Cash in bank, is that one of the things you have to know?
No.
Okay. So cash in bank is, we'll use cash in bank a lot. That is how much I currently have in actual cash. That's not, I have to sell the bike first before I can get the cash. That is actual, like, I can go to the bank and pull out $1,000 right now. Okay? That's my cash in bank. Then you have office equipment, which would be my computers. my desks, my chairs. Then I have office supplies, which would be kind of like my paper, maybe my printer even, stuff that kind of makes it work. Then I have, computer equipment, which kind of for me is office equipment. And then I have accounts receivable. Accounts receivable is accounts that you intend on getting paid, but have not quite got the money yet. So right here, we talked about what it was like for me, right? This is how much I'm worth. You would put this money here in your accounts receivable, saying that you have $400, you just haven't received it yet. It's like a projection of what you are going to get, okay? Liabilities is your accounts payable, or what you owe other people, whether it's for a truck or a car, or for your computers, or for your desks, okay? And the capital account records the rights to the assets. So for this bike, I have $600 worth of my rights to that bike. I still owe $400.
So if they try to take, if you try getting it repoed, take the wheels off, like I paid for these, or at least.
A lot of people who have their stuff repoed will try to do stuff like that, yes. Yeah. Assignment 3-1, Excel spreadsheet. We are going to open up Excel. We're going to do a lot of work in Excel. A lot of work. Okay, you don't? You also need to get into Schoology. Do you have a Schoology account? Okay. So will you log into Schoology for me? And add a class?
Thank you.
Huh? No. So go into Schoology. So here, if we go into Schoology really quick. So if you go to courses and then business accounting and click on accounting, we're in Unit 1, Intro to Accounting. And we are in Oh, I don't have it up there.
Can you show it to your camera?
Mm-hmm. Totally thought I put it up there. Sorry, guys. We're in Unit 2. Okay, we're in Unit 2, Chapter 3. And it's Chapter 3, Accounting Equation. It's this Excel spreadsheet right here. You click on it and download it. You should get something that looks like this, I'm guessing.
Hey, what was it called? Try it or...
No, it's the Unit 1 test. Oh, I'm sorry. Go back. We're in Unit 2.
Oh, okay.
The accounting equation. We're in Chapter 3. Chapter 3, accounting equation. And we are going to do assignment 3-1. So here is actually all of your assignments that you're going to do in this class. Okay, so we have assignment 3-1, 3-3. So if you click down at the bottom, right here, all these tabs.
3-3.
Well, here's 3-3, here's 3-4. These are all of your assignments you're going to do this unit. I put them in one gigantic Excel spreadsheet, so you just have to click on the bottom and then save it once. So all your assignments stay together. Okay, we're going to do assignment 3-1 together. So this is your asset. I'll do the first couple with you. It should turn green if you do it right. Okay, so your asset is $17,000. That is how much I am technically worth. I am worth $17,000. I owe $7,000 to Tommy. So how much do I actually own of it? What is my owner's equity? $10,000. Okay, and this will turn green when you get the right answer. Yes?
I don't have the same. This is a school laptop.
You need Excel.
So I'll have my school laptop in like a week.
Okay, get on one of those computers that has Excel. Or, do you want to do it up there?
With you?
Yeah, and then you can do it.
Sure.
Okay, let's make it bigger. Okay. Stand right there. Here's your mouse. There's the keyboard. Ooh, I'm recording you, Holly. Huh? Okay, so you have something that's worth $17,000. That's how much you're worth. You still owe $7,000 of it, which means you owe $10,000. Okay? Here, you own, let's say you bought a car, you own $20,000 worth of the car, you still owe $6,000. How much is your actual total worth? How much are you really worth? No, here. 10,000 plus 7,000 equals 17,000. This is how much you're actually worth. It would be 26,000. Uh-huh. Okay. So here you have something that's worth $10,000. You own $7,000 of it. So how much do you still owe? Mm-hmm. Okay, here you own another car that's worth $17,000, or you own $17,000 worth of the car. You still owe $9,000 more, but how much are you actually worth? Like, what's your net worth? 26,000. Okay, and I want you to try and do the rest on your own. This is recording you. That's really weird.
It's funny.
Polly's watching. She's going to get a whole bunch of you just looking at your computer. It's going to be awesome.
Yeah. Are you already done?
Yeah.
I dropped half the
Well, you can have it do math for you.
Oh, yeah?
Yeah.
You should probably do that.
So you can type in the equal sign.
Oh, yeah, I remember this. You write some equation out.
Equals sign. Yeah, and then it's, what does that equal? It equals 8,000 plus or minus 2,000.
Well, that's good for like bigger numbers, right? And just free, I think.
Mm-hmm.
Well, that's cool. Especially if you have like a wild number in there.
A crazy one.
Mm-hmm.
Yep, the great thing about Excel is it'll do the math for you. You just have to tell what the equation is. And I assume you've all done Excel before in Miss DeBlazy's class when you were a freshman. Okay, so what's an asset?
The whole.
Yes.
And you do this one, subtract that one?
Yes.
And you subtract that from that?
Mm-hmm. Okay, just go put it in the box for me.
Your mouse speaks fast. You gotta do that one, subtract that one. Right?
Yeah, because you were worth 7,500 and you own 3,000 of it, so how much is left?
45? Right.
There you go. Okay, you're done. Anybody else need more time to do that? We're good?
I think if I'm finished, everyone else will probably finish.
It's good to know. Okay, so does that make sense? Assets, how much you are actually worth, what your net worth is how much you owe plus how much you own. Does that make sense? Okay, that right there is probably one of the most important things that you will learn or that you will have to remember this entire year. Make sure you know that equation. Okay, types of transactions. We have business transactions. This is on the back side. Oh, we got it. Okay, sorry, they're kind of all over the place. So on the back, we're going to go to business transaction. A business transaction is basically anytime you do something with your money. Okay? So whether it's an event that changes an increase or decrease in either your assets, your liabilities, or your owner's equity. So if I have my bike and I owe Holly $600 and then I pay her another $100, that's a transaction. Or let's say I bought another bike from her and I take out a bigger loan from her, that's another business transaction. Or if I pay her off in full, that's a business transaction. If I use my bike for money.
Are you trying to sell your life?
Sure. That is a business transaction. Anytime something happens that either increases or decreases either your assets, liabilities, or owner's equity, or it's always going to be two of them. You will always affect two. That is called a business transaction. Okay? Then you also have accounts. An account is a subdivision of an asset, a liability, or an owner's equity. We're going to go through all of the different subdivisions that you can have in an account. What it does is it shows the specific item and a record of the increase or decrease of that item. And I have a show me that you understand link number 1, but I don't think we're going to do that.
So when you go bankrupt, they take all your assets?
Mm-hmm. That's why if you are a sole proprietor, you have to be careful because first they'll take all your business assets, and then they'll go after your personal ones.
That sucks, like, there's people in your grandma, maybe die.
So let's say that your dad goes bankrupt. They would first take all of his logging stuff and all of his materials, all of his machinery that he has, all of it, and try and sell it and make money that way. And if that doesn't count for the debt, they'll start, or they could, start to take away your house, your cars. That's a good question. I think that's only dependent on if you used it as collateral.
So like if your house is completely paid for it and then they used it like
They probably won't. That might be safe. But a lot of the times, businesses will say, I don't have $500,000 to start my business, so I'm going to put my house as collateral, meaning if I can't pay it back, they take the house or the car.
You didn't take like horses and stuff too?
Possibly. It depends on how you have it all set up. But yeah, banks are just going to be like, oh, you couldn't pay it back. I'm sorry. You know what I mean? It's just like, they're like, that's our money. We're going to get it back however we can.
We didn't do anything on the top, did we?
Not yet. Okay, so investment. Investment is also on the back side. Okay, is money paid out in order to produce a profit? Why investments right here? I should put those in order. Why would you ever, is it possible to pay in order to get money?
Or like a loan? If you like be paperwork and
Okay. You make rugs, right? Did you have to pay, well, you didn't have to, but would you have had to pay for your loom? Is there any way that you could have made your rug without a loom so that you could make money? Right? So sometimes, you have to pay for equipment in order to make money from it. Okay, that's basically what an investment is. Whether you're investing in yourself, in your equipment, or in somebody else, it is money that you pay hoping that eventually you will produce something. So, we're going to go through some assets, liabilities, and owner's equity. We're going to figure out where it goes. Maria gave 2 telephones to her business. Each telephone is worth $200.
Who's on the top?
Oh, we're here. We're on this side right now. Okay, so what is my asset? What is my liability, what's my owner's equity? Every time you do something to an account, you will always put it in two places. You cannot have an asset without either fully owning it or owing some part of it. It's impossible. Okay? So asset, what is our asset? Okay, so 2 telephones, let's say.
Just write that like.
In number 1, just in the box right there. Okay? Do I 2 telephones, and it is what, $200? I think that's all we needed to actually write. Hold on, let me see. Crap. Sorry. Okay, so Maria gave 2 telephones to her business. Each telephone is worth $200. We're going to do cash in bank as an account. Hold on.
Do we need all these lines?
That is the wrong transaction. That's why it's confusing. Hold on, I am sorry. Maria. 25. Okay. Sorry, we're starting over. Maria took $25,000 from personal savings and deposited it into her business account. What is her asset? Is it an asset? How much is she worth right now? Her business. Not her business. Huh? 25,000, right? So here she has There we go. So here she has cash, right? She just got cash for her business. How much did she get? Okay, we'll start there.
Are we missing now?
Huh?
Are we missing?
We're going to finish this.
Okay, we need to be gone.
What?